Well, we know it's been a tough year for the private equity stocks, but because there's too much uncertainty about the economy and where interest rates might be headed. But if you believe the Fed will eventually cut rates, maybe the group can rebound. They do trade, unfortunately, as a group, which brings me to Hamilton Lane. This is an alternative asset manager / consultancy for institutional investors based in the Philly suburbs. It's in Conshohocken. This one's only down about 15% for the year, making it one of the strongest performers in the group. So let's take a closer look with Erik Hirsch, the co-CEO of Hamilton Lane. Mr. Hirsch, welcome to Mad Money.
Jim, thrilled to be here.
Well, I'm so glad you're here because I want people to understand that not all these companies are the same. Now, I had Blue Owl on this morning, and they're a totally good, respectable company, but they're under a lot of pressure. And I said to myself, good, I have Hamilton Lane on tonight, and I can have them explain what they do, and maybe we shouldn't all lump you guys together.
I think that's the issue right now. The industry needs to be better understood because we are not all birds of the same feather. Right. And so right now, we are more of a solutions provider, manager of managers. We're not a single monoline general partner, which is what I think the market most associates the industry with.
So do you look for a fund that you want to then sell to others, of which in that sense you're a bit of a fund-of-fund manager?
We're a bit of that. We're a bit of a solutions provider where we're leveraging our relationships with all of the private market ecosystem to design products and portfolios for our clients to meet whatever their objectives are in the private markets.
Okay, would they be otherwise able to access the funds that you are accessing for them?
So in some cases, they certainly could. There are very big name firms out there that we're all familiar with. But I think the industry is much, much bigger than that. Today, there's about 6,000 private fund managers all over the globe. And so most individual investors, most institutional investors just don't have the bandwidth to go out and find that deal flow, to assess those managers, and to build portfolios. It's just too big of a landscape.
Now, it does seem that you've got what I call very sticky investors because they're different from the traditional gigantic institutions. Why don't you tell our viewers about how the mosaic that you have seems very strong in this environment?
So our client base is hugely diversified, ranging from individual investors all the way up to sovereign wealth funds and everything in between. But most of them have made the exact same decision, which is they want Hamilton Lane to handle their private markets portfolio for them. So in that sense, we've essentially been an outsource provider for them. They're not going to try to build what we have, 800 people, 23 offices around the globe. They're just not going to make that investment for a small part of their portfolio. They're going to use us as a partner.
Got it. Now, this morning when I interviewed a Blue Owl executive, it was not clear to me at all that they could necessarily have the liquidity needed if someone wanted their money out. Of course, they said, listen, that's not a concern, but I find it sometimes it's harder if you do a lot of, say, real estate bonds. They're not going to go to 130, 140. I mean, there's only a certain price. There's a bid, there's an ask. What about the liquidity of what you're putting people in? Can they get out if they have to?
So they can get out, but we're also very clear with people. This is a relatively illiquid asset class. Okay. And so we're never selling this to people by saying, hey, it's fully liquid. It's not. These are long-term investments, and we counsel investors, whether they're big or small, to recognize that you should be thinking about this from a longer duration standpoint. Our clients have embraced that. They're thinking about this in 5, 10, 15, 20-year increments. They're not thinking about this on a daily basis.
Now, I looked at the comparable of the competitors. Candidly, I'd not heard of them. I mean, I heard of Hamilton Lane because I'm from Philadelphia, but you do have a niche that I think that you can dominate. It's not like you're going up every day against Goldman Sachs or JP Morgan.
We're absolutely not. So the number of solutions providers out there is very, very small.
Very few.
It's a much more of a niche business. So again, we're not competing with the 6,000 general partners that are running around. We're not trying to manufacture deal flow. We're leveraging all those relationships. And so for us, it's a much bigger scale business. Jim, we oversee today $1 trillion of assets. That's a big scale business. It's very, very global. It's very diversified. And we're sort of leveraged off of that long-term trend of more money continues to go into the private markets. And we think that's a good thing.
Well, it just seemed like when I looked at your portfolio, I mean, it looked at your business. I mean, it just keeps growing, and it's not really. It has nothing seemingly to do with the Fed, nothing seemingly to do with the up or down of the economy. It's just a growing client base.
That's exactly
and
right.
you make money from them.
We're not tied to that. So changes in interest rates does not impact our business.
Right.
The overall economy, you've seen Hamilton Lane grow in good economic cycles and bad economic cycles. We're much more fundamentally driven around, do investors want exposure to the private markets, and do they believe that Hamilton Lane can be their partner for that?
Well, that's, to me, a simple message, not some of the convoluted messages I hear that are, to me, discouraging for individual investors.
This is our Philly roots. Simple.
I like it. Stay that way. That's Erik Hirsch. He's co-CEO of Hamilton Lane, HLNE. And if you're from Philadelphia, this company is a big deal. And if you're not, maybe it should be a big deal anyway. Thank you, Erik.
Pleasure.